Hello and welcome back to the channel. In this series, you're going to see 25 days of trade analysis. I am calling it 25 days of Tradesmas. In this Tradesmas series, if you are going to be watching it, I highly suggest that you take the opportunity to be participating in the giveaway. I would love to give back to you guys in the YouTube world who have supported me and followed me. I am always very interactive in the trading floor community, but I know there's a ton of you who have followed me for a while who aren't in there, and I want to be able to give back to YouTube as well. So from the bottom of my heart, thank you very much for all of your guys' support here on my YouTube channel, and I am wishing you all the warmest of holidays, whatever holiday it is that you celebrate. I personally celebrate Christmas, so therefore I am doing the 25 days of Tradesmas. But whatever your holiday season is, I wish you and your family and loved ones a very warm and happy holiday season. With that being said, I am doing the giveaway here on my channel. So for every day that I do one of the Tradesmas videos, if you do any sort of interaction, if you like, comment, or subscribe, you will earn an entry to be able to qualify at the end on the 25th day to be part of the drawing that I am holding. I will draw a winner for the giveaway. I will announce the winner on the 26th of December. The prize will be to win a yearly subscription to the trading floor. So if you guys are interested in it, make sure that you are doing the likes, subscribe, and comments. Obviously, you cannot resubscribe over and over again, but don't worry. You will get 3 credit points towards that, but then every day following it, as long as you leave a like and you leave a comment, you'll get 2 additional entries for each of those. In addition to my giveaway, if you guys love giveaways, we are doing one on the Trading Floor YouTube channel as well. It's the same thing over there in order to enter as well, though it is interaction. So if you like, comment, and subscribe over there with that channel, you are going to be entered into a drawing at the end on the 25th as well. We will draw a name for somebody to win a $1,000 cash prize. You do have to have PayPal to accept this prize, so make sure that you can accept PayPal if you're going to go over there and enter into it. But I think that's a really nice prize. I think most people this time of year would love to have $1,000 extra. So make sure that you guys are also checking out the Tradesmas that we are doing on the trading floor. And there are lots of styles of trading happening over there on their Tradesmas. You will see all of our live streamers and our staff submitting videos. So if breakout trading isn't really your thing, or maybe my style isn't your thing, no worries. Go check out the Trading Floor's YouTube and make sure you are subscribing, and commenting for an opportunity to win $1,000 cash prize at the end. Okay guys, let's get into the video, and happy holidays. Hello and merry day 20 of Tradesmas. So in today's video, we're going to talk about the trade on the 8th. There are 3 of them that were taken. I'm going to just go over one of them because the idea behind it is the same for all of them as far as the entry and stuff like that, but the rewards were different. And I did talk about this a little bit yesterday as far as a stacking type of idea and how that works. So you guys can see I have my initial type of 1.5-ish type of rewards. It ended up being 1.7 because I used a zone, but I like to secure at least a 1.5. And then I did take bigger hold. The entry though is the same for them. And I don't want to get too far into all 3 of them, only because I only have 5 days left in this series, which is crazy because it's going by quick. And I have had a lot of requests to go over some of the trades that I did during July strategy wars. So I know you guys have been messaging me, asking me to go over some Stairmaster stuff. I showed a ton of Happy Trail things during this. I'm showing some price action stuff. But I do want to show some love to the Stairmaster people because I do love Stairmaster as well. It's another indicator that I use a lot. And I have gone back and forth between Stairmaster and Happy Trail when it comes to strategy wars. And in July strategy wars, I competed with Stairmaster. And I was showing all of that in the testimonials like I do whenever I'm in strategy wars. So I've had some requests for me to break down a few of trades from July and just kind of walk through my rationale for entries on Stairmaster. I will be honest, it's not so different than what I do with Happy Trail. At the end of the day, my price action, so it really is the best thing, not necessarily indicators, but I am happy to make that request for you guys and show you guys some of the trades from July. I just wanted to show you guys some of the trades in between, not just strategy war stuff, but I am going to show some Stairmaster stuff. So that is what's to come for the last 5 days because I want to be fair to those people who are trading that strategy and who follow me because of Stairmaster, because I know there's a lot of you guys who like that too. So I hear you. I'm going to make those videos. Those are coming the last 5 days of Tradesmas, so keep an eye out for them. But let's finish up September so you guys get an idea of what I saw here with these trades and what I was looking for. I did mention to you guys that I would show you a fib. I talked about that a couple videos back. I don't typically draw these on my chart because I just visually can tell where I'm at. I want you guys who don't visualize these very well yet, or maybe don't even know what they are, to follow along a little bit better. We're talking about a retracement of a full move. So when we were looking at NASDAQ, we're on the 15-minute time frame. Again, we had a bearish sentiment. You can pretty much see I was just basically selling all of the month of September, except for the one buy, which was a loss. So anyhow, we were in a seller's market during this time. What I was looking for is a retracement of a strong move. So when I'm talking about a strong, potentially overextended or exhausted move, what will happen is the market will make its large move, very quick, strong movement. So you can see that down. And then it will become exhausted and it will need to retrace. Basically, what's happening is that they are driving price way too quickly down. And they need to answer it back. They need to come back to a price that makes a little more sense. And they drive price back up to retrace this move. So bringing the price of the market back to a point that makes more sense. And then usually it accumulates before it will make another move. So that's what I was looking for here. We had a really strong bearish movement down, very strong trend down. And we had seen that market structure started to change. So I knew that we were in a retracement. What I was looking for was about a 50%, if maybe even deeper, like a 61, and potentially even a 78 with indices you can get. But just somewhere in this range, you kind of want to start to see some retracement happening and see if you could look for another continuation of your trend. So you would look for a retracement to at least the 50 or the 61. This is your golden zone. That's why it's yellow. That's just how it comes. It's literally called the golden zone. If you guys don't know anything about it, it's just how it's preset. And then there's also the 78. And these are the main levels. This is just default settings for the Fibonacci, but people who will tweak them a little bit or maybe set different levels. But at the end of the day, it's all an algorithm to just kind of show you retracements. You could tweak it all you want, but it all works the same, truthfully. It doesn't really matter how much you change your Fibonacci. Default is just fine, and it's free, and it's included in your trading view. So I really wouldn't suggest needing to do anything fancy with your fibs. It really is just there to show you, how deep of a retracement has the market retraced. People will also get really fussy about how you draw them and stuff. I just quickly threw one on here. You can go into a bunch of YouTube videos about how to draw them if you want to get super into fibs. I never really got super into them personally. I like zones. Like I said, I'm more of a zone person, but if you like the fib idea, go check them out. There's tons of videos on YouTube about fibs. But honestly, once you draw enough fibs, you kind of start to visualize it and you don't need to keep drawing it. You just know that, hey, here's the bigger overall move. Here's where the market stopped. Here's where the market is now. Is this level about 50% of this overall move? And you can see that it is. And then as it goes deeper along, you kind of get an idea of roughly what level you're probably at in your retracement of the fib. But if you still need the Fibonacci on, and please feel free to draw them on, and you can always add it on to just kind of give you a confirmation. But again, that's just where my thinking was. I knew we had market structure change. I knew that it was happening based off of the overall trend, which was actually bearish. I was waiting to see a tap on the 50 level. I was hoping to get maybe a 50, maybe even a 61, and try and look for some entries there. I did get it at the 50, and I was able to get in here. So that's what I was looking for. This is my actual entry so you guys can see it. So remembering that this little markup, this guy, is this guy. So I saw that. I saw a nice strong bearish candle, another super strong bearish candle. I was looking to potentially get in at this point and then just secure my stop loss above the 50, just slightly above it. And I wasn't looking to hold this trade very long at all. This was not supposed to be my runner. You guys can see that I had other runners. This is supposed to be my quick, secure some profit trade. So I've talked about this in previous videos. This is my same day trade, get out at the end of the day, have some money in my account so that way when I go to take those bigger runners, I can let those ones run a little more comfortably and potentially if they have to go and draw down or anything like that, and not worry that I didn't make anything or that my account might be negative now. So this was my higher probability trade that I took. So I had taken this trade, and then the other two trades that you saw on there, those ones did go into some drawdown. Those ones were larger stop losses that I had on them based off of the fib retracement levels. So like the 61 was like another level that I was using for a stop loss. So they didn't all have this super tight stop loss on them, but they also had much larger rewards that I was going for. So I didn't need to keep as tight of a stop loss on it. Those were meant to run longer over the course of a couple of days, whereas this one was just meant to run for the current day. And that way, again, I've talked about this in previous videos, so you can go check them out. They're linked up in the right-hand corner in the Tradesmas videos, but that's my logic. Securing the profit and then letting this be like my trade 1. Then I had trade 2, trade 3 for different levels that I was going to. And I did use different retracement levels as far as like stop losses. And that's kind of how that worked for me. So it was kind of like looking if there was a deeper retracement, protect a certain area, stuff like that. A little tip here for you guys who do like Fibonacci's is that I would draw out your zones still, because you'll find a lot of times that your Fibonacci's will still line up with your zones, or at least some in one way or another respect them. And even just like marking up market structure, you'll find that happen a lot too. What I would call the top of the zone here, is at this level of the 38, and then when that flips all around, and now this becomes like a new support level, and then this becomes a new resistance level, that's at this level here. So you can kind of see like that's working as a zone, and when you look to the left, it's an old zone. And like typically you'll find this like here, there's a zone within this level. So like if you're decent at marking your zones and you throw on a Fibonacci, a lot of the times on a like pretty big move like this, where you have market structure or zones or whatever you have marking up, supply and demand even, you'll find that the levels will tend to overlap quite often with it. And that's just another confirmation to confirm that you're marking up well, that your analysis looks good. So, that kind of can be another helpful thing for you. And the other thing is, I think sometimes when people get lost in trends, the Fibonacci can be nice. You can draw it out for you to help keep you track of where you are in the trend. If you haven't broken your 100 level and it hasn't come back all the way and like blown past your 100 here, you're still trading in this trend's direction, most likely. You haven't created new market structure beyond your trend, your stronger trend that you're working with. A lot of times, like people who like trend lines or visualize better with like that style of a trend or a wedge or just like something different than maybe zones, they really will tend to gravitate more towards a Fibonacci. But Fibonacci's can be really helpful for anybody. Really, really good tool for beginners. I highly suggest it for beginners to learn it, because the retracement and the way that the market retraces on all of these timeframes, a Fibonacci really can kind of help you with that. So if you are looking for more help with Fibonacci retracements, we do teach it in the trading floor community. You guys can check that out in our price action course, or you can always check out one of our live streams too. We have a couple of streamers who work pretty well with Fibonacci that could help you guys. So that is it for this. This is the month of September, and I think that we will, for the last 5 days, like I said, probably get into some stuff from July. So I am going to skip over August just because it seems like more people want to see some Stairmaster stuff, and I haven't done Stairmaster since July. So August, again, was a lot of this swing trading style stuff. So it's very similar to what you've been seeing in the last few videos that I've been doing. To be fair to you Stairmaster people, and to show you guys something a little bit different with a new indicator, I will save the last 5 videos of Tradesmas for Stairmaster people. So if you guys are interested in it, check back tomorrow and we will look at what July strategy wars look like. All right, you guys, I'll see you then. Bye.